So, on to the topic of an all-star discussion on the future of instant, frictionless and cross-border payments. There's a bit of a ruse to this because this is the second all-star panel I've moderated today, so everybody are all-stars, but this is definitely an all-star panel. I'm Vincent Brennan. I was Head of Payments at Bank of Ireland. I was also, until last year, Deputy Chairman of the Euro Banking Association, and as part of that role, Chair of the EBA's Open Banking Working Group. So delighted to moderate the session. To my left is Oonagh McGrane. Oonagh is the Director of FI Commercialisation for Client Products and Commercial Banking at Lloyds Bank plc. Oonagh has over 25 years' experience in the field of cash management and payments, and prior to Lloyds, she worked for ABN AMRO, for RBS and Citi, covering a variety of roles there, so you're very welcome. Lewis Ide is Head of UK and Ireland for SWIFT, so congratulations, Lewis, a new appointment, I understand. And prior to joining SWIFT, he held multiple roles in technology firms in London, most recently at Fircosoft. And prior to his career in financial services, just to display his diversity, Lewis was a professional footballer with Brighton and Hove Albion, who are a Premiership club at this stage. Next over, we have Michael Boel, who's Head of Local Clearing for Banking Circle. Again, Michael has over 15 years' experience within the financial services sector, having joined Banking, but before joining Banking Circle, he had worked for Saxo Bank. He's focused on both international and domestic payment ecosystems and covers both technical and business aspects of the transaction banking value chain. Next, we've got Connie Blacklock. Connie is the EMEA Head of Real-Time Payments for JP Morgan Payments, and prior to her role there, she spent 4 years as Switzerland and Expansion Country Product Manager, and 6 years in a variety of global technology analyst and product owner roles. And then last but not least is Ross Jones, who leads the high-value payment product management team at Barclays Corporate, where his top priority is the successful delivery of ISO 20022 across a range of platforms. So good luck with that one, Ross. And he has over 14 years' experience, banking experience, previously with BNY Mellon. So a superb panel to talk about the future of frictionless, instant and cross-border payments. So if you're interested in innovation, smart data, digital operating models, digital strategies, open banking, embedded finance, banking as a service, payments as a service, and crypto/CBDCs, you're in the right room. If not, time to leave. Okay? And again, welcome to our audience online. I believe there's 400 or 500 people joining us online as well. So I'm going to kick this off, and in a world where the user front end is increasingly becoming invisible, instant, frictionless, and unfortunately free, I'll put this to Ross first. Ross, would you agree that back-end platforms act as enablers for front-end innovation? And if that's true, what about the role of regulation?
Okay, so first point is yes, I do. Just following on to that is, I'm a bit torn in terms of the innovation piece, because innovation in itself shouldn't be driven by what your back end can be capable of. That's not how the best ideas come about. But in banking, and certainly innovation in payments, having a strong foundation is absolutely critical to success. So that's resiliency, information services, right? So real time over batch, the ability to scale up, and having that infrastructure which allows you to be nimble and agile and be able to bring new services to market much quicker. I think that's absolutely critical. And if you can get that right, building payment innovation on top of that is going to be far easier, and you're going to be able to scale that up at speed.
Super. Oonagh?
I think there's a lovely duality between technology and the capability you're able to deliver. But I think I heard recently a very nice one that technology doesn't deliver the use case and it doesn't deliver the customer experience. It is what our customers are trying to do that the technology enables. And I think we've seen some lovely elements of that on the back end of open banking, which I know has been quite a big topic today, where we've been able to work with customers in figuring out what the commercial use case of the technology that was brought through in that. So it's really just built up a nice ecosystem of APIs to bog standard payments, make a payment, get a notification that a payment has been received or made, and use all of those widgets to build up a much more seamless client experience for our commercial customers. So I think from that perspective, from us, it would probably be a bit of both the technology and the client use case. And I think we also talked a little bit about how that impacts Swift GPI, where we already had the rails in place for Swift GPI for high value tracking, and how we can now start to utilise that in the instant payment space that we've seen in the UK and in India.
Very good.
Yeah, I promise not to sucker punch you on the GPI point here. Oonagh and I was having a little bit of a discussion backstage around, can you really combine GPI with instant? Because then it de facto wouldn't be instant in that sense. But I think there is some pretty good, just to second what Ross and Oonagh is saying and that one, the back end will enable ideas to grow in the front end in here. So the stronger the stability and the foundation of our back end, the more ideas will grow upon it in here. So it would probably be exponential. So it's not the back end that will grow the ideas, but it will have a fantastic strong foundation where we can grow ideas on top of that. And that will have an exponential effect on the use cases and all the things that the people out there is not seeing from some of us sitting in the basement building it or thinking about it, didn't think of. And coming back to the GPI point, we had massive discussions around how to combine GPI, which is a process tracker across banks, so you could see how banks are doing, and you could get, just like you get on your DHL or UBS tracker, to see where's your package in there. You wouldn't need that if it was de facto instant. But we do need it cross-border here, and it's a good point with the high-value systems that this is where it all starts. If we can get that seamless feeling and people will get a value add out of it, we'll have a strong foundation, and the next frontier that we will pivot our UETR, the GWT invented by Swift, thank you very much for that, that will cascade into our local ecosystems, and in the end, hopefully,
Very
Yeah.
good.
And I just want to echo the importance of stability for your infrastructure. I've learned, especially in the real-time payment space, when you've got huge volumes of transactions that a blip in your system for even a second can cause in hundreds, if not thousands, of payment failures. So getting that backbone right is incredibly important. And just to touch on the regulation piece as well, where sometimes that can be seen as a barrier to innovation, but again, touching on real-time payments, I've seen the importance of sometimes having the regulation behind making something mandatory to help get that innovation. So, we're seeing a SEPA Instant hasn't got the full reachability yet. And I think maybe, what we've seen with the UK Faster Payments already and what Switzerland I know are looking to do, maybe mandating to get to the point where you have your strong backbone, but also, the 100% reachability for something like instant payments. You then pave the way for innovation to go on top of that, because those value-add services won't work if you don't have that full reachability across the schemes.
Yeah, and it strikes me, again, from my own experience, I mean, that we, as the banker and even the Swift in the community here, we talk about a lot of that heavy lifting that we've got to do in the background that you don't hear from, a lot of the Fintechs and even some of the neobanks who are built on the much more modern technology, but it's an absolutely essential, as you said at the start, Ross, if we can get that platform right, then innovation built on top of it is really, really powerful.
The Fintechs have done a fantastic job, especially in the UK. We're really looking at, okay, what are the core foundational banking services, starting with sort of accounts, payments, foreign exchange, and then they've really packaged them together with some really cool user experience, making it very, very seamless. And I think banks are definitely catching up. The gentleman was speaking before in HSBC was like really inspirational in terms of what they're doing. I think for a while the banks were focused on very much the foundational and the regulatory things which they had to cover, mandated to cover by law.
Yeah.
And now they're starting to think, okay, well, we can compete here as well. We've got the access, we've got the reach, we've got the experience. What can we do?
Yeah. And speaking about access, I mean, in the panel I had earlier, we were talking about data, and I suppose three aspects of it. One is that there isn't just the data that exists within each of our organizations, and in banks that's even a huge amount of data, but the amount available outside is huge. Then accessibility to that, which of course open banking helps because you can now get that on a permission basis, and then the engine to actually analyze it. So data is actually critical on the data. But if you look at the conversations, I think in previous years it was all about big data and the volume. conversation is now moving to smart data. What does that mean for you guys, Lewis, at Swift?
Yes, I think it's really interesting actually when we talk about data. And the first thing that springs to mind, unfortunately, I'm a bit of a payments geek now after working in the industry for a few years, is ISO 20022. And I think really when we're talking about sort of foundations and building blocks and platforms, for me, ISO 20022 is a building block of data for these future platforms. I was talking to someone in one of the breaks, he said, you wouldn't build a house on a foundation of sand. And really, for me, ISO 20022 is that future foundation for where the industry could head. We're seeing it in a number of different ways. I think there is the sort of the local market infrastructures that are moving their own systems to ISO 20022. There's Swift and our own kind of cross-border services. But really, it's the language of messaging, or it's the language of payments, right? And if we're all speaking the same language, it makes it very much easier for us to communicate, to collaborate, and to innovate. So for me, I think the foundation is ISO, and then we can look at that as a building block for other services. You can start to look at AI, machine learning. We were talking, I think, in the session before, in the break before, around the connectivity of instant payment schemes, right? If instant payment schemes are all talking the same language, it makes it a lot easier for us to connect them and start to transact in that way. So I think my sort of foundation goes back to ISO when I think of data.
And Michael, smart data for you?
Yeah, many things now. Louis, you're mentioning the ISO 20022 as being one language. It's basically one standard with many dialects in there. So people refer to it as one language, but it's a conglomerate of different variants of the standard as such. I hear many of our clients and even internal colleagues, I won't mention any names, none of them present in the room today though, don't worry guys down there, but they're saying, Michael, why can't we sell ISO 20022? It will be much easier if our clients doesn't need to change anything. It's the same, but guys, this is what ISO 20022 is all about. Don't see it as a liability that we request more data for you. See it as an enrichment, because the more data we have, the more we can send downstream, and the more we can actually give to the schemes, give to the correspondent banks out there, and the less they would need to come back with from a due diligence perspective, the less they would need to gear their AI machines or transaction monitoring patterns, because we're giving them the data. There's no need for a transaction monitoring lead calling and saying, can we get some more, can we get the VAT number on this entity, et cetera, because you already gave it to them. They have the package that it would require, unless we let them cut corners here. So see the increased amount and request for data as a strengthening instead of a liability of what it is in that sense. So I think that is about what the ISO 20022 is about. How we can use it in a variety of ways. People will always think about commercialization, etc. We in Banking Circle use it for transaction monitoring and sanction screening primarily, where we are building strong backbone, sanction screening and transaction monitoring everything. And it's much easier the more data you request on that. So embrace your ISO 20022. Don't see it as a liability that the clients must provide the IBAN and the address, which some people see as a liability. There's no cutting corners. The ISO 2022 standard is over 4,000 fields. The MT to MX standard is coming up. Louis, thank you very much for that. But I think the T2 SMIC part is coming up first. We've seen it on other schemes. Faster payments is also adhering after NPA will become a reality. In reality, I think the biggest one will be the T2, and then Swift will follow afterwards. Once the target 2 transforms to T2 and Swift goes the same way, then we'll see the true potential of ISO 20022, and that will materialize and cascade into the bank's backbones. And then it's going to be fun to be a data analyst.
Ross, I can't read from here. You're either smiling in agreement or grimacing with the pain of
Was it the dialect?
Well, from the bank perspective, there's 2 angles for ISO, and that's connecting to the major schemes and being ready to be able to pay and receive like we do today, and then opening it up to the customers so they can take take advantage of all the extra data. That's going to take quite a period of time for adoption and start to see more of that data flowing in outside of what's mandatory. The big change on the shift from big data to smart data, I think, is the ability for organizations store more data, so advancements in sort of data lake and the ability to warehouse that data, and move from big data, which is looking at what happened yesterday, to looking to be able to predict what's happening tomorrow. So it's like an enabler of a predictive organization in that sense. So like cross-border payments, for example, typical use case, you look at your payment flow, you look at your charges, you look at your GPI data, how long a payment took to get from A to B, and you might make some changes in your system that are going to change the way that those payments are routed, maybe for the next month, 3 months, 6 months, depending how easy it is to make that routing change. Whereas smart data is making it far more dynamic. It's getting those data flows coming into your system using AI and the algorithms that the data scientists come up with, and making changes on a daily basis, which is going to drive better customer experience and drive down costs and increase the speed. So there's advancements, but it's also as well, it's data scientists working with the business to look at the challenges on the use case, customer problems or opportunities to drive down costs, and working out how to do it.
Yeah. And I take, sorry.
I was just saying, Ross talked to building the foundations, right? We were talking about this as well in terms of ISO standardization and rolling it out, be it in the high value schemes or for the coexistence period. We're already seeing quite a lot of duality in terms of how people are doing that, whether it's truly native and you're looking at your client channels and how you source better data and have it really flow through the whole transaction chain, or whether you're just translating and how you can manage that period. And we're also seeing quite a distinct kind of line of dialogue going, whether you're migrating the MT standards to MX for the payment messages, but then you also have the statements and the exceptions and investigations and that whole wider landscape that all have this amazing potential to give us much better data and give our customers much better data. So it'll be interesting to see how those foundations pan out.
Yeah. So I think the foundation is coming through strongly in the first two parts of the discussion. It wasn't exactly the word you used, Michael, but feeding the beast and enjoying that, because there's so many benefits to come out of it. And I like the piece that big data is about yesterday and smart data could be about predicting tomorrow. Are there any questions from the audience at this stage, rather than us waiting till the end, or any online? We've got one here at the front. Yeah, Mike is here very promptly. Thank you.
Hi all. I guess you've all been talking a lot about the future-looking use cases, which is really positive, right? But I actually recently did a podcast on operational resilience, and one of the interesting things was looking at a lot of financial institutions in the UK. That in itself can prove quite challenging, right? So if you look at over the last 90 days, pretty much all the major banks in the CMA9 have had outages in some way, shape, or form. So do you think the current financial institutions have the right core to be able to do more with data? Because we know the Fintechs certainly do, and that's where a lot of the future-looking experiences are coming from. But do you think collectively as an ecosystem, because only a few doing it isn't useful, as an ecosystem we have the right foundations in place to be able to do whatever those future-looking use cases look like?
I mean, I'm happy to maybe take a swift view on that one before kind of going to the banks. I think it's an interesting question to pose, and I'm keen to hear the answers myself. But I think when we're looking at kind of from a Swift perspective, there are a number of different technologies that we're looking at with the industry. We take a role as a sort of a global cooperative, so we're looking at everything from a community standpoint. How can we work with the community to increase the offerings that they can offer to their customers? So we're very, very much embracing cloud and looking at how cloud can form both the resiliency part, but also, build in applications for front-end innovation. We're looking at APIs and the API technology, not just from the technology itself, but how can we harmonize that globally? When you think of a global network of 12,000 institutions, how can we ensure that we're all using the same mechanisms for transferring that information through APIs to enable that front-end innovation? So they're just a couple of examples. I think that we see it being embraced globally. We see it being embraced by all the financial institutions. So I think that levels the playing field, certainly. But that's kind of where I'm sort of seeing that from a Swift standpoint. But yeah.
Sure, I'll take a stab at it.
Sorry, Ross, I wasn't meaning to.
No, that's fine. So I work in product management, and every year we go through we call it like a strategic investment cycle, and we work out where our money is going to be spent in terms of how much can we spend on commercial versus how much can we spend on resiliency. We call it keep the lights on. And I would say that 80% of the budget goes on keep the lights on initiatives. So that's investing very heavily in our infrastructure, Is it perfect? No, I don't think any bank would say it's perfect, but we've got, like all banks, all banks are on a digital journey, whether they're at the beginning or, gentlemen at HSBC, looking at how they can open up channels for disabled people. The digital element of the data, I would say there's been significant progress made. I've seen that in a number of organizations I've worked at, and being able to move from being able to get access to basic payment data to be able to actually take that data and be able to provide useful insights to customers that are going to help drive their behavior or help drive a more valuable conversation, huge progress made. So I think you're still relatively early, and I think the access to to improve payment data through ISO is going to improve that, because you're going to have a greater visibility of the use of payments, purpose of payment codes, extra data, structured remittance information is going to go from 5 lines of 35 to 160 different fields. So it's significant. And obviously the banks need to match up their systems infrastructure resiliency with a huge amount of extra data they're going to get. I'm glad I don't work on the technology side, but it's definitely something which all banks, I think, are investing in.
And if we
sorry,
go ahead, Connie.
I was going to say, totally agree with everything Ross is saying. It's a journey. I think, especially for a lot of banks, they're making their first steps or middling steps to get to the end goal. But it's a multi-year strategy, and you've got to think, what can I achieve now, and then what are my future goals? And this is something that we, encourage our clients to kind of do as well, that they might not be able to be, again, especially for me in the real-time payment space, they may not see the use case for real-time straight away or able to jump to APIs and everything instant immediately, but what is their journey? What can they start doing to then maybe be ready for that in 2, 3, 4, 5 years' time, whatever that is? And so we're seeing that across not with our clients, but in the bank space as well. I think as long as we all keep moving and keep pushing towards, what we know the benefit, everyone knows the benefits of ISO 222, we know where we want to go, and we've just got to keep pushing for that. And like you said, finding that budget somehow
exactly.
to do all the value-added things as well, which is so important.
There's an expression in Irish that says, "It's far written or droshasav," which is translated to mean it's better to move than to stay in a bad place. So I think that piece of keeping moving. But if you pick up the theme that, because this is heavy lifting and these are big programs, whether it's ISO, whether it's Target 2, etc., like the world won't stand still. So like while the big players are making those moves, almost in a sense, like will today's best customer experience become just table stakes by the time you've got there, Oonagh? How do you keep up?
I think we were talking about this in the international payments landscape, and as Ross touched on, there's an awful lot of competition and players in the UK who are offering these amazing services in terms of FX, the speed of transaction. But I think for those of us looking at the international payment space are aware of it's not a frictionless environment. We talk about friction in payments all the time. There's friction in getting the information that you need to send across. There's friction in how many partners that you need to make the payment. There's additional standpoints in terms of sanctions journeys and all of that sort of. So there's a lot of friction there already that hopefully our customers are not necessarily as aware of as we are. But I think if you look to some of the standards of this EPMI work and looking at what are the real pain points in terms of the international payment from a client perspective, not from a provider perspective, and what are they looking for? And I think that there's something that we're trying to utilise both in looking at the one leg out or cross-border immediate payments, but really looking at it from a perspective of how quickly you can make the payments, the speed of it, the transparency of it from the client, and the cost. Because at the end of the day, if I wanted to make a dollar payment to, or whatever currency payment, I don't expect to just have my account debited and it somehow arrive at some point in time, but also how we can use that information. So I think it's really interesting to think of, you can either think of GPI as that sort of DHL tracker, Michael, or you can think about it if I can just pick up the friction levels. So we just assume the payment will get there. So even at the moment, we see something like 73% say of our international flow will get to a beneficiary in half an hour. But what happens to the other 27%, and how can you intercept that and alert that there is missing data or something has happened, and how we can create that journey? So I think from a customer perspective, they're not aware of a lot of the friction that exists, but they may not have the best experience. So it's how do we make that experience the best as possible, I think.
So payments are becoming frictionless, but not all of them right at once. Yeah,
Some more friction than others.
yeah, absolutely.
I think that there's good reason for some that are, that aren't frictions.
That picks up one of the questions. That picks up one of the questions we've had online from
Super.
our audience. Is how do you make sure it's the right amount of friction that is applied? How do you make sure it's the right amount of friction is applied to a transaction?
Okay, so almost implied in the question is that the free flow, nobody looking at and nothing being checked, isn't good either. So there has to be a certain amount of, whether it's oversight of the payment or whatever. Anybody want to pick up on that? Sounds like a good Swift one.
Well, I'll give it a go. So I think from a friction perspective, there is friction in payments. I think we're all, certainly in the cross-border space, and that's driven sometimes from regulation. You look in at the EU, you've got the wire transfer regulations. There are obviously sanctions, obligations that banks need to adhere to. So there is always going to be an element of friction that we see in payments. I think when we look at friction, we might look at it in a slightly different way. And how do we remove certain types of friction? I think to Oonagh's point, when I look at now that the sort of the GPI or the speed of GPI in cross-border transactions, the median time is about 1 hour and 38 minutes for a cross-border transaction. So I think that goes a long way to dispelling some of the myths that cross-border transactions are slow and take many, many days. I think on average we're crediting end beneficiary accounts within about 45% of the time within 30 minutes. So there is a clear shift, I think, that we've seen in removing friction and the speed increasing. We're going a step further and looking at how we can remove friction in sort of initiatives like pre-validation. So how can you utilize pre-validation to remove friction at the point of creating the payment? We've seen it in the UK with confirmation of payee, and there's additional benefits there from a fraud prevention angle. But how can we see that in the cross-border landscape as well? So that's certainly something that we're pushing quite hard in how we can remove that friction and make sure we've got good data up front. There are always going to be use cases, whether it is specific payment purpose codes, or there are sort of certain requirements as you sort of clear currencies into certain jurisdictions that require additional information. There may be exceptions in investigations, but it's then how can we increase and enhance that process as well. So we're looking at ways in which we can, through case resolution and APIs, actually make that process a lot more seamless and efficient. So I think there's always going to be friction, and there's regulatory purposes for that, but it's where there isn't, how can we remove that friction? And so certainly we're seeing good progress, I think, in terms of the speed.
So it's less friction rather than frictionless is kind of what you're saying, yeah?
Or it's frictionless.
Yes.
It's less of it,
Very good. Yeah. Which leads me on, again, when I think back to my time at Bank of Ireland, the number of colleagues, senior colleagues who've come to me and go, but Vincent, outsourcing, white labeling, banking as a service, payments as a service, there must be others who can do this better for us. So Connie, can I put that one to you? Like, how do you decide, when would you reuse before you buy? When would you buy before you bill? How do you sequence those choices?
I think for us, I've seen firsthand at JP Morgan where reuse is incredibly important. So last year we were able to go live with over 7 real-time payments markets across the globe. And that came down to having a platform where we were able to identify synergies and opportunities to reuse code. 85% of the code was reused in our clearing system rollouts. And so even though all those local clearings had all their nuances and had their own local requirements, and we touched on before about infrastructure, that backbone of moving a real-time payments is largely the same. And so that reuse is incredibly what allowed us to have such success in last year and having that speed to market. And that's often the biggest challenge in any kind of innovation. It's how quickly is the speed to market, and how can you keep up when there's so much change going on. And if you're not the first in the market or a fast follower, sometimes you are immediately left behind. And so, yeah, for sure, reuse is such an important thing that I've seen firsthand, especially at JP.
Michael?
Yeah, I can only concur what Connie is saying. If you build a strong backbone, the faster the instant payment schemes growing, it's the same, but a little bit different though. That's where the nuances of the dialect kicks in. It's a little bit also depending on where you are on your journey, because can banks operating solely on mainframes reuse whatever they have? So saying some parts, some they can. Well, we've gone from seeing new banks coming in the Scandinavia. We have this universal bank thought that your bank should do everything for you, where you're a little bit better in the UK saying, I have a payments guy, I have a FX guy, I have a insurance guy in that sense. We've seen the universal banks being broken down taken over partially by the neobanks, but now the neobanks is actually starting to reconstruct and wanting more services in there. They want a bigger piece of the pie. So what does the banks need to do? This thing, you need to have a focus area of what it is that you really want to be strong of. There's so many offerings out there. So my take would generally be saying, do the core service that you're best at, build that yourself, nurture it, and basically fill in and adapt, configure it out to the dialects that are out there. And there's so many good solutions on other things out there where you could piece them together. So I think it's a mixture, both on where you are on your journey. We're definitely reusing the same way that you guys are doing there, and it is more or less the same. So don't worry, guys, it gets easier after you have done it a couple of times. But do that, and then find what you want to be good at, and buy the rest, because it's impossible to be champion of all trades here. It's complex to do payments, really complex these days.
It's complex to onboard a vendor as well. And that's one thing which often stands in the way to be able to work with third parties. So technology often want to build it themselves. Naturally, we want to retain the IP, and we've got the expertise, but often it's a challenge of priorities, coming back to that gentleman's question around where the investments come in terms of resiliency, that type of thing. There's a lot of benefit of working with a third party. So if you're talking about moving into a new market, for example, and you want to test the water and have access to local systems, but invest in the user experience, the marketing, and get a footprint in that market before you start going direct yourself, I think that's a decent use case. But we've got lots of banking as a service providers, but I've not seen that used. I've not seen banking as a service use of the big names yet, but I think the use case is there. If you take the UK, for example, if you had a large US bank, for example, wanted to come into the UK, there's a number of banking as a service providers who would be able to provide them like a bank in the box. That I think is definitely of interest.
Yeah. So do I take from that if you're in a sense starting afresh, whether that's expanding into a new market, whether you're expanding in a new kind of product line that's not dependent on your legacy systems, then payments as a service, banking as a service is a real option.
It's quicker. It's just a quicker way into a market.
Yeah.
There's lots of hurdles which you would need to get over.
Yeah.
First of all is why can't we build this ourselves, but then it comes down to speed. How quickly do you want to move into that new market? But that banking as a service is provided a new option in a sense, because you've got accounts, you've got payments, you've got access to local schemes.
Yeah. Well, it's not to suggest that the promotion and advertising from the various firms that their systems are open source, that they're microservices, API enabled, or whatever, and this is just plug and play. That's not true. But it's a question that there are circumstances in which that works, but then there are others in which it still requires a heavy integration to
absolutely
to legacy systems. I was really taken, Connie. I had never thought about sustainable banking as being around reuse and recycle, but it's just kind of a new definition of it. In the few minutes that we have left, maybe a final question to the audience. We could have gone in next door and had this conversation all this afternoon, but CBDCs, stablecoins, next big thing for payments, or if not, what is? If I could work across the panel. Okay, I'm not going to work. Michael, you're laughing there, so we got to start.
It's throwing a little bit of a red flag in my face there, Vincent, on that one here. We had the conversation sort of prior to this, and perhaps I'm going to be unpopular here by dissing stable coins or CBDCs in that way. To quote Warren Buffett, he's saying we already have digital currencies. It's your web bank. Go in there. He's not a fan either. We've recently had the discussion in the Nordics here where right now there is a legislation suggestion up at this point of saying forbidding tobacco permanently if you're born after 2010. I'm not a smoker myself, but I don't like the thought of somebody going in and regulating it. And the CBDC was brought up as an example, saying, imagine if you had a social security number where you were born after, your wallet would totally just block you afterwards, saying, if you're born after this date, your money is no good here. You cannot buy tobacco with this wallet in here. So for me, it's sort of saying, if you go down that way with the central banks, we want the the blockchain thought there and some of the nice things that comes with that. But it's also handing over the keys completely to your freedom on how you spend your money in that sense, and being able to enforce it from a regulatory perspective in there. So are we handing in our freedom in that sense? I get a little bit anarchistic myself when talking about that. So there are good things about it, but there are also some topics that needs to be discussed if you want to go down that route and what you want to use it for it from an ethical perspective. Yeah.
So anybody a fan on the panel?
So I'm going to sit on the fence a little bit, am I a fan or not? And I think we'll take the position around the sort of the interoperability piece. So I think there's an element, if we go and create sort of CBDCs in specific countries and we want that cross-border element, how do we do that? In fact, it's not just limited to CBDCs. It could be any kind of digital island that could be created in the context of its own sort of remit. And I think from the SWIFT position, we're looking at, okay, well, how do we ensure that we get interoperability between these platforms, between these systems, between these digital currencies? And to sound a little bit like a broken record, we're going to kind of go back to, okay, are they built on ISO 20022? Do we have the same frameworks? But really for us, it's around how do we experiment in that kind of cross-border sense. So we have a couple of experiments that we're working on currently around how do we look at the kind of, for want of a better phrase, the FX. If you've got two CBDCs in two different countries and jurisdictions, how does that work in practice? Because at the moment we're seeing a lot of theory. Well, how do we apply some practicality to it, and how do we start to test and see how that may work? But I think our key position on that is really about the interoperability and how could we make it work cross-border if it is something that the industry decides to take forward in anger.
So I'll be pro CBDCs just to be a bit controversial. So first of all, I think the adoption is going to be quite challenging to move people from fiat to CBDCs. But I think the programmable element of a CBDC is quite an interesting use case. So if you take, for example, like an energy tariff. So if you've got solar panels on your roof and you're using energy but also generating energy, you could set up some level of coded agreement with your energy provider that there's an automatic drawdown of funds or an automatic recrediting of funds in CBDCs. So no action needs to be taken there. It could be all automated. That's just one use case that I was thinking about yesterday on this. And I think we're seeing more and more of those use cases with cryptocurrencies, so Ethereum being very programmable. And we're just at the start. And I think the way that the central banks are moving is to put something in place where they have a little bit more control and opening it up to something which is currently completely unregulated and could very quickly run away.
So maybe in a sense it brings us back around, and we're just out of time, but I'll go back to one of Oonagh's comments earlier on. Technology of itself doesn't deliver the use case, and I sneaked out earlier into the next door room to catch David Birch, whose own take on crypto and digital currencies was that the real juice in this is the platform that it delivers that can enable innovation. So you've almost got the two same themes in that. Guys, a huge thanks to our panel. We talked about that piece around the platform, or the fundamental platform in terms of delivering on use cases. We talked about ISO 20022 in terms of a building block, but also that piece in terms of using this as an opportunity to garner and feed more data into systems that then can produce much stronger business outcomes. We talked about big data being a yesterday, backward lens where smart data is more about predicting the future. We got on to talk about frictionless, or less friction, or frictionless, whichever way you want to put it, but it's not friction-free, that's for sure. Talked also in terms of, particularly for the large organizations, that sense of reuse and recycle has a large place to play, but banking as service, payments as a service certainly is an option as well. And finished up there with the conversation on CBDCs. So huge thanks. Pardon?
Oh, it's hard to pronounce, right, Vincent?
It is very hard to pronounce, and I haven't even started drinking yet. There we go. So listen, please give a round of applause to Oonagh, to Lewis, Michael, Connie, and to Ross. Thank you very much, guys.